The euro posted modest gains yesterday but remained range-bound in the absence of strong drivers from the euro area. Comments from ECB President Christine Lagarde and Fed officials had no impact on market sentiment. Today, the euro may well break out of the sideways range thanks to the British currency. The pound sterling has already reacted to inflation data. The UK Consumer Price Index fell to 2.3% in the year to April, down from 3.2% in March. On the monthly basis, consumer prices rose 0.3% in April after climbing 0.6% a month ago. Thus, the April figures, which turned out to be more deflationary than expected, underscored expectations that the Bank of England would pivot toward interest rate cuts. Although potential monetary easing was supposed to contribute to a weaker pound, market participants stormed into the risky asset, seeing such a move as an economic lifeline. They expect the British economy to rebound in the second half of the year, which in turn supports sterling. Now let's take a look at today's macroeconomic calendar. It includes speeches by Bank of England Governor Andrew Bailey and BOE Deputy Governor Sarah Breeden. Supported by their dovish comments, the pound sterling may extend gains, with the euro following suit. After all, the European Central Bank also intends to cut interest rate this summer. As for statistics from the United States, traders may take notice of existing home sales data and the Fed minutes. However, the detailed record of the committee's policy setting meeting will hardly have a severe impact on market sentiment, as U.S. policymakers have taken a wait-and-see approach, expecting to see renewed progress on inflation before easing monetary policy. Therefore, demand for the risky assets is likely to remain strong, with the European and British currencies hitting 1 week and 1 month highs. From a technical perspective, the 1-hour chart shows that the euro-dollar pair continues to trade sideways. A false breakout at 0.845 will generate a buy signal, driving the euro up to 1.0871. If the price consolidates above this level, the volume of long positions will increase further. In this case, the pair is likely to rally to 1.0893 and 0.918 and even 0.942, where I recommend going short on a rebound to catch an intraday correction of 15-20 pips. Short positions at 1.0918 and 0.893 can only be considered on the false breakout. Alternatively, if bears regain control of the 1.0871 mark, it would be wise to sell the pair, continue on a decline to 1.0845. If the price breaks below this level and tests it for the bottom up amid the hawkish tone of the Fed minutes, the euro will come under pressure and dive to the levels of 0.821 and 0.797. At the mark of 1.0797, traders may go long on rebound, expecting an intraday correction of 25-30 pips. Going long at 0.821 and 0.845 will only be relevant in the event of a false breakout. Meanwhile, the pound-dollar pair is trading upwards. BOE Governor Andrew Bailey's statement may aid to buying interest. If the price breaks through and consolidates above 27.63, sterling would extend gains to 28.00 and 28.45, where traders are advised to go short on a rebound, expecting an intraday correction of 30-35 pips. Short positions at 28.00, 27.63 can be opened amid a false breakout. In case of a sharp drop in the British currency, bulls are likely to take the lead at around 27.22, causing its false breakout. Going long on rebound will be relevant at 1.2697 or 26.72, at least at a 25-30p move. Best of luck.